This conference will now be recorded.
Before we begin, we must provide a disclaimer that the following information provided is not investment advice. Our methods, teachings, and content are for educational purposes only. All materials and lessons are protected assets of Market Making Strategies, LLC. Any plagiarism or sharing of our content is strictly prohibited, and any violators are subject to applicable laws. With that being said, hope you all had a good morning. Just to have a quick recap, although we had some decent setups, as we saw, they didn't really come into fruition the way we wanted. What have we seen more of that was more interesting today was a continuation of build. So with that being said, and being that this is a beginner's informal lesson, and I want to be able to answer your questions, not just based upon what we do as day traders, because a lot of you come in here are not necessarily day traders, but are loving and enjoying how the prints play such a vital role in understanding where a stock can go. And you can play that in any method you want, whatever trading instrument or tool is your preference and that you're more comfortable with. So with that being said, you can see in the chat that me and David were going back and forth on IONQ. IONQ is very interesting, and I'm going to tell you guys something that I do just for interest to see what's going on in the mind of retail. Because at the end of the day, if we're following market makers, one thing that we can't forget is as followers or as people who follow market makers in our way of trading, that means we also want to know the opposite side of what is retail thinking and what are they seeing? How are they making their decisions? So I always go in out of interest, clearly not bothered by of what they're saying, but just to understand what their thought process is. So I go into Yahoo Finance, I go into some of these trading apps, I'll go in wherever there you'll see traders or people are commenting on stocks. So out of interest, I looked at IONQ for the last 2 weeks. I'll just keep reading different areas just to see what people are saying. And because they base a lot of their theories and a lot of their trading on the charts or information that's public, whether that's in the news, it's amazing to see how much confusion goes on. When they see the price of the stock has rocketed from like 8 to 25, yet the revenues are nowhere near relative to that, they're trying to understand what the propulsion of a stock is. And the higher it goes, the more risky it becomes for them. And they take these very, very, very meager returns or get out early because they just don't know prints. At the end of the day, they can only assume what they know, and they only know what they know, and that's all they have to base their trade off. What makes it different for us is we are extremely unique. We know how to read prints, and as we know, prints move the market. Prints is the control shown by market makers. Prints is basically them telling you what the future of that stock looks like. So for instance, we're seeing right now with completely off topic, SMCI, if you guys are watching it, it is absolutely mental how much buying has come into that stock. If you're looking at it right now, look at this 2049s and 50s and 55s. See, in that 1 minute, in 60 seconds, the amount of information we just received, seeing that somebody bought somewhere like 1 million shares with a value of maybe $28 million, that 1 minute is so vital to tell you where this is going. The information that we can see tells us so much about a stock, but if you were looking at a chart, the only thing you're going to see is this line that went from 28 to 28.50, and that is all you will know. There is nothing more to tell you anything else past that. So if we look back to, as I was saying, is IONQ, sorry, the SMCI I was talking about, I don't think it's going to show it, but if you guys go back, you can see that this bar basically here was nothing but pure buy. And if we know with SMCI, there's been nothing but buy here all morning. But if you're looking at this, you're saying, Nothing more than it's gone from 26 to 28, but you'd have no idea about what that future means with the buying unless you can read prints. So for instance, if we're looking at IONQ, the reason I found IONQ so interesting is I saw IONQ build around 27 over the last few weeks, probably buying about 10, 11, 12 times. Then it had that massive pullback all the way down to, I believe it was like 22 or something like that. Anybody who's retail, anybody who can't read prints is going to look at that and say, see, told you, it's coming back. It should never have been that high. It's too valued. They're going to do this. They're going to flush. They're going to do all these wonderful terms that people use. Yet where are we now? Right back to 27 building at 27.50. I don't know why they love this stock more than the information that we have seen. I mean, they did that with Tesla for years. It was burn rate was ridiculous, yet the valuation kept increasing. So when you look at a stock like IONQ and you see all this accumulation, do you think this accumulation is going on because of the information today? Or do you think that it's accumulating and the market makers are just buying up ridiculous amounts of position because of what they see is the future for a company like this? So the charts will only signal what's happened, giving you very, very little returns because you can only base it on whatever you see on the chart. But when you have the access to prints, when you learn how to read prints, when you understand what prints mean, that starts giving you access to the future. That gives you access to price targets that have only been established by those who can read the prints. So having an understanding of the prints is so vital because it's going to tell you what's going to happen next to a high percentage. That also means that if you know what's going to happen to a high percentage, if you have been watching and learning, and yes, it's very new, but over time, you'll start understanding how big buying requires big pullbacks. So not only would you have seen that there was huge buying at 27, but because of that huge buying, when it came back, it decided to pull it all back in one day, all the way to, I believe it was like 20 or 21 or something really towards that level. All that did is gave you an opportunity to buy back shares or buy back future options at a lower price, nearly $6 below the buying, knowing the intention was for 30. That dramatically, just that alone, understanding that the prints needed a pullback, gave you an opportunity to add options or take a position. Just from that move from 22 to 23 or whatever it was back to 27, you could easily go up in your option price by 50% or even $1. Let alone the fact that once it actually makes its move to its target, now we're talking about percentages going up 100%, 140%, whatever it may be. Because you are following the prints, you are following the market maker, you are following the strategy that they set. And given the fact that they have access to an abundant amount of resources and money and the ability to manipulate a stock, we know that to a high percentage, they will take it to where they want to take it. Even if that was for a short-term $30 target, a short-term $35 price target. They're going to use the news. They're going to use what people are enjoying, the exposure that a sector is getting, and take advantage of that. Take advantage of that to make what they want. And that's the beauty of what prints are giving you that you're not going to get just by being able to read a chart. So if we looked at IONQ, just to keep it basic, we had nice buying at 26 again, and then it came to 26.50. There was some buying. 27 had ask again here, had ask again there, and all throughout here it had 3 times of really nice prints at 27.50. Comes back again. There was more ask I saw at 27. So let me ask you, somebody raise their hand and come in. Who wants to come and speak with me on IONQ, just so that they can get a complete understanding for their own sake, to understand how trades like this can set up the future move, can set you up for a swing or for a longer term option play. Who would like to take a go at explaining to me what was the strategy overall used here then today? even though the stock went from 25 to 27.50, which is going long and has a nice range and even higher than its average, what was the strategy employed today by the market makers? What were they technically doing? Who wants to come on and give it a go? As I told you a lot earlier, and I've been saying this last week, it is proven that active learning, you will learn and you will remember somewhere between 7 to 10 times more than passive. With passive learning, any type of lecture form, you do not retain nearly as much as you do when you take what you learn and speak on it and create a thought, and now you're being that thought. You are putting that thought at the forefront of your mind. So I see we have Trevor here. Okay, Millen, let Trevor off, please.
Oh, you should be good to go.
Hey, Doug.
Trevor, how are you, sir?
Doing good. How are you?
I'm doing well, thank you. So, okay, Trev, we're here on IONQ. So my first question to you is, what do you think is the strategy being employed overall, even given the fact that it clearly went long? It went from 25 to 27.50. What did you see happening in here?
Yeah, today all I've seen is build, specifically exceptional build from about 9:30 to 10.
Yep. And that's it. And I love how there was not much more to say, because when the information is clear, when the strategy is clear, you're absolutely right, Trevor. It was exceptional build from 25 to 27.50. 27.50 going sideways was regular build, so that would be phase two, still structurally build. And then phase three is volumes lowering. As we can see, it kind of slowly waned off all morning, and now it's continuing its build going lower. That is exactly what it is. And the reality is, if you looked at it as a chart, you would say, oh, it went to 27.50 and now it's coming back. They're selling off, they're flushing out, whatever these terms that they use. But is that true, Trevor?
No. No.
And those who don't see that, and this makes that move one day, and all that volume comes in and it goes into money time, are going to sit there doing what? What do you think they will do?
They'll wait, and then they'll wait, and then they'll chase
There
once it
you
gets up
go. They
high
will
enough.
chase, because what kicks in for retail? What kicks in
FOMO.
for anybody? FOMO. And what does FOMO buying do to money time?
It accelerates it.
Does all the work for them, doesn't it?
Mm.
Imagine all the petrol, or as you would say, the fuel needed to move the car is going to come in the form of retail. It's going to come in the form of FOMO, the fear of missing out, because they can't read or understand prints. So they don't know what's going on behind the chart, behind the bars. That is so important. You are left in the dark, which for me was the biggest thing when I started trading, and I speak on this, is I do not understand how people can have a high percentage plan and a plan to maximize what they see when this one has already happened, being a chart, and two, I have no idea what's going on in that volume, no idea what's going on in those bars. So how can I really ascertain what the intention is? Well, the only way you're going to ascertain intention is prints. Hence, we find ourselves here as day traders, as tape readers, to understand what these prints mean. All right, Trev, thanks for that. Now, Trev, before I let you get off, is there any questions you're on here that you have for me from today or yesterday that I could answer? And keep it basic.
For IONQ, I don't have any questions. I know that we're still in exceptional build, so we know that there is more of a, or I guess like less of a time frame on the build period, right?
So let me ask you something. Do you expect this tomorrow to go into money time?
No.
Do you expect this tomorrow to keep building?
Yes, that's what we've seen.
Why?
Just because
Why do
that's
you
what we've
expect?
seen.
can it tomorrow decide that it's time to go into money time?
It
Can
can,
this
yes.
can
It
it
can.
decide that it's time to go to the next stage and start building at 30? It wants to make its move past this area of build and structurally go to the next area of possibility of build. Could that happen?
It could happen.
So we don't know what's going to happen tomorrow, right?
Right, we don't.
But we
It
know
could.
right now that it's in a long build phase. Now, has it been in a build phase just today, Trevor, would you say? Or has it been in a build phase for some time now, at least a couple of
It,
weeks?
yeah, last week and a half, last 2 weeks.
Do you think they're doing all this build just to bring it all the way back down to 14?
No.
Now, in our build, here comes a very important question. If we said that all the build we saw in IONQ was for a target of 30, and it goes towards 30 but never prints and you start seeing selling, does that allow you to just hope that this will now go to 40 or 35?
No, definitely not. It has to establish something at 30. It has to give us information there.
So whatever the case may be, are you basically saying if we're going to follow the prints, we have to be true to the prints at all times?
We do, yeah.
Do you want to should I give you a perfect example of how important prints are?
Yes.
Did you watch HIMS last week?
Yep, the 30 ask.
So
That's exactly
what
what I
was
was
my
thinking.
target that I said a long time ago? It
I
was
believe it was
30.
25. Oh, it was 30. Okay,
My
okay.
target was always 30, never 25. My target was 30. Now, given my options expired on Friday, but the reality was, what was my target? 30. And on Monday, it got close to around that 30. It printed at 30. What do we know about 30, Trevor?
Psychological level.
And then on Tuesday or Wednesday, how big were the prints at 30?
They were very, very well above per personality.
So I'll tell you how many it was. It was around about 2.5 million shares. What is 2.5 million shares times 30?
60 million?
What? 2 times 30 is 60, plus 15 is $75 million is the investment someone made at 30. What happened the next day? And I'm going to lead this into how our option strategy works because HIMS was perfect for it.
Yep.
The next day, there was some news announced. What was that news?
It was that Amazon is moving into basically become a HIMS competitor.
Yep, absolutely. And they've set up their pharmacy last year. So what's interesting about that is, yes, we have the prints, and the prints did meet their $30 target. But if you stayed in, and let's say that your strike was this week, this Friday, and you said, oh yeah, more buying at 30. Number one, that type of buying at 30 needed to be built on no matter what. And the size of those prints said this could come all the way down to 25 or less. So you had to get out either way because one, those prints were too heavy at a psych level that needed to be pulled back. And we know that when it makes a substantial move and the target is 30, now it needs to reset and come back. But part of what you guys will be seeing from us in what I'm building out with the team on our option strategy is prints are, of course, extremely vital. But things in the industry can change that aren't always announced. That could be environmental changes, that could be new entrants into certain industries, it could be war, it could be recessions. A lot of these factors can change even what the plan that market makers set. So not only do we need to know how to establish and read prints and be true to our targets, we've got to have some basic understanding of the company, basic understanding of the micro and macro environments around that company. So that way, when certain things happen and come in the news, we are prepared for the changes that the prints can't necessarily plan for moving forward also. So it's going to be a very, very, very nice, simple, but tight option strategy that we're going to be introducing. But I thought IONQ was a nice example of what we're seeing in regards to build, but also looking at how people are viewing IONQ just based off charts and how off they are. And then secondly, HIMS. You get to your target, you've got to take off. Now, if it shows as an extension of the target, you got to be mindful that how far has it traveled? What levels is it at? What type of buying are we now seeing? Does that buying need time to build upon? Is that a cap of the move for the present moment? Because one thing we know, especially if you've got options, is that you've got time decay. You can't hold on to them for longer than what your contract allows. If you've got swing shares, then or you got shares, then absolutely you can hold it longer, depending upon if you found the company investable or if you're looking just to make the short-term targets for the buying that you see. So definitely different strategies that are involved. So okay, we spoke on HIMS and we got spoken IONQ. Does anyone have any questions on these or any stock from today or yesterday? You can ask now. It's, like I said, active learning. Does anybody have any questions? Please raise your hand and Milan will let you speak. Okay, if we've got no one right now, then Milan, could you now put it on UAVS from yesterday, please? We're going to speak on, I read a few people speaking or had questions about what it did in the open, so I'd rather go over it with you. Milan, change it up, please.
Be able to see that okay?
Yeah, give me 1 second. Okay. All right, go. But you got to go all the way back to the open, Milan. Just go right before the open. Okay, so as we can see here, this was yesterday's trade, UAVS. This is yesterday's pre-market, but we're 5 minutes away from the open. Clearly what we saw is nothing but exceptional build. There was so much build in this. What was a target that I gave overall for the type of buying that we saw in UAVS? Anyone? Anybody? I don't. Just remember, I know the answers. I'm not here teaching myself. Anybody want to give it a shot? Was it 5? Was it 550? Did we say the overall buying was enough for 6 on the calculated move? Or does that change? Okay. Trevor, anyone? All right.
I don't remember.
Okay, no problem, no problem. All right, so yesterday's target, if we look at this, came off 250, went all the way up to 450. That's a $2 move. I said to you the building was underneath 5. So when you build underneath a psychological level, that means that two things. One, you want the retail to get involved to push the stock past 5, not to stop it at 5 on larger prints. That's what they typically mean when they are building underneath a massive level like 5. So if we looked at a calculated move yesterday, we would have said the perfect situation for this would have been a pullback to 4 with a calculated move to 6. And 5 wouldn't be too much in the way. It would play with the short term or the exceptional buying, whichever it intended. The difference that happened is we're going to see, look at this buying. This is complete exceptional buy. There's nothing here that shows anything less than that. For it to continue as an exceptional buy, we just need to see loads and loads of volume and it to carry on, and 5 shouldn't get in the way. If we were looking at it to go in and go into more of a money time for a 6 target, that would be different. And we want to see a lot less of just big prints and buy, but a more smaller print personality, a bit more thinned out with high volume, showing that they want to use retail to then take it to their target of 6 or higher. 5 would be great for that because you're going to get all the retail you want, getting ready to see this and take this above 5. That's when their indicators would go off. That's when the rapidly rising on their scanners would go off. And that's usually how they trade because they need triggers. They need something that tells them this is time because they're based off charts. They're based off technical analysis. We are looking at exactly what's going on, which is different. But you're going to see something interesting happen when it opens. So right now, based off what we spoke on yesterday, we are planning for it to either pull back to 450 if it went towards 5 before the market opened. Then it could come down, beautiful print line at 450, major level, acceptable because it's 50-cent pullback away from that 5. And then we'll be looking at a trigger to go back towards that 5 with an intended move for 6. The best possibility more than that is it opens closer to 450, comes down towards 4. Again, we see the money coming back in above 4. Now we're traveling right back towards the 450 print line and then 5. That would have been your game plan. But knowing its exceptional build, the only intention that they have had in this stock is to acquire. It would need significant volume with very clear money flow in order for this to transition into money time. Now we can also, and we've done this plenty of times, have seen a quick move in open from 450 possibly on all exception buy because they want to take all the shares available, use all the volume in the morning available, which is the highest volume, to eat up as many shares as they can all the way to 5, allow retail to enter, take their shares, and then either keep going on the exceptional build if they want to get that many shares, or they come and bring it back and just continue to build. The main thing that cannot lack, and what I mean by lack is not just one great bar, consistency in massive volume and massive volume entering in this stock. You cannot have anything less than that. So now we see it opened. First thing you see is more massive build prints. That's a huge take bar. A take bar when it's prior to the open means someone's getting ready for the move. A take bar when it opens is them using all the volume and taking more shares to continue acquiring. Who can now understand the difference? I want someone to come on. I've given you guys the secret of that move. Who saw that or who now understands why that happened? So one of you spoken this yesterday in the room. I wasn't there, but I always read the chat throughout the day. I'm not sure who it was, but who understands now why that bar said a lot more than anything after? Come on, we got to get people speaking now. This is honestly, I got to get people on here to speak. You guys are not going to improve if you don't come on and speak. Active learning. Somebody speak. Don't be scared. Raise your hands. Do you want to be a trader or you don't want to be a trader? Do you want to get to my level or you don't want to get to this level? You decide. It doesn't bother me. I'm already here. I've put in the work. I knew what it took. And any moment I had a chance to speak, a chance to get involved with my mentor, I always took that chance. Because at the end of the day, this trading is for me. Milan, could you let Kevin on, please?
Kevin, go ahead.
Kevin, how are you? Milan, he's not off.
Okay, can
I
you
gave
hear
him
me now?
some. Okay.
Can you hear me now?
There we go. How you doing,
Hey,
Kevin?
hey, Doug, how are you?
I'm good.
I just had the question yesterday. The way the volume came in around 4, it was later after the initial take bar. I was trying to plan a trade around 9:30, and yes, now what you're explaining kind of does make sense. That it's
Where's the
even
video, Milan?
even though it went to 5, there really wasn't anything to go off of there because of the halt.
Yep, exactly. Now I'm trying to, if I could get that video back on, Kevin, I'm not sure where it went. I could show you that a little bit quicker. Sorry, I think we're having a few technical difficulties here, but we'll get it back on. Okay, so you were saying again, Kevin, right? So you see how that bar. Now, what is it exactly that you were seeing?
No, this was later. Whenever I was asking about it, it was looks like 9:45ish. It was a take bar that I saw um, above and through four. It started at 398 and ended at 408.
Ah, so here's the thing. That take bar was now, as it's building, going lower.
Yes.
So that's just pure acquiring. But if you notice this first minute and second minute, are you seeing the type of substance that says, our build is done, we want to release and get to that target? Or are you seeing them say, no, we prefer to use all the volume, we still want to build more?
No, yeah. The initial movement, like I said, without there being substance at 5, didn't really give me anything. I just didn't know if later the take bar there at 9:46 was something that would indicate it going back to 5, I guess was my question yesterday.
Got it. Perfect. Okay. So as you'll see, that's what it was there, Kevin. And then straight away, what's the thing that starts falling off after the first minute?
Volume.
Yeah. And once that volume falls off, they're basically indicating to you that we're not going to be releasing this and we're not going to be going into an exceptional move, because even if you were if you're doing exceptional buying, that 100% needs to have exceptional volume at all times, because it's very clear what the intention is. When they're doing exceptional buying and the volume's dropping off, now you know this is transitioning into a regular build phase.
Okay.
That's how you know the difference between the two. Now, let's change the situation, and let's say that bar opened up, Kevin, and it went to let's not even say 2.6. Let's say that bar opened up and the first bar was 1.4 million with a 3 to 4 print off-level print personality. So basically the type of prints that are saying we are jumping in on the move from the build to the target. That's what those short-term prints indicate. That's basically market makers taking small positions to say, I know this has to move from 450 to at least 550 or 6, and I want to make that interim move and make the profit on a very short-term basis. Those are the type of prints that you're going to be looking for. You're not going to be looking for the type of prints that say, okay, I want to acquire this for the long term. This is part of my acquisition of building a position. The second you see that in a trade like this, the chances of it working out are about as low as possible, because when they are exceptionally building, the clarity has to be completely clear, because there's no games to be played. They're only doing one thing, and that's using all the volume possible to build the largest position they can. But when that volume falls off, that's them telling you we are not going to be using an exceptional build strategy. We're going to be using a regular textbook build strategy, and we're going to be building on our way down. And that's pretty much what it did. Every time it pulled up to 5, what do you think it was doing, Kevin?
I really wanted to see it hold for the 430. I think you said 434 there. But like I said, without the prints at 5, I didn't think it could do much of anything until I was really wondering more on a smaller term trade from 4 to 450, and what that would take after the tape bar. But like you said, if you saw the 3 or 4 prints early, I would want to see it pull back to that 440, 435 range, just above that 434 prints we saw early, and enter there.
Yeah, exactly. But when they didn't print at 5, and what do we know about 5? 5 is where you're going to get as much of the retail introduction as possible. What they were basically doing is, the closer they got to 5, the volume was being taken care of by retail, and all they were doing is using that volume just to keep buying. And that's why they weren't putting the prints that you wanted at 5, because all they were doing is pulling it up to 5 to get more shares just to come back down with. That's the only thing they're doing. They're not looking to establish a position at 5 that needs to meet a target. And more importantly is, do they have the shares that they need to reach the target anyway?
Oh yeah, from early, yes.
Yeah, if they really wanted to. I mean, look at this. They were exceptionally buying from 3 all the way to 5. In a cheap stock with this much volume and buying between a range of $2, do you think if they were going to release the position, it would be a okay release, a timid release, or will it be absolutely blatant? If you're building on millions of shares between 3 and 5, and now you know that of 450, let's just say there was a conservative first target of 6 or 650, do you think they're going to waste any time in making that move and playing games and you having to question what they're doing if they've built that many shares up $2? Not at all.
No, they would run through 5 and then
Yeah,
550 and then pull back to just above 5 to go to 6.
exactly. And the reality is that volume would be coordinated in the same way. If you looked at the volume in this, it was used sparingly. It was used with intention to build, and that's all they did. Now, don't get it wrong. I took this off 450 because at the end of the day, it was holding 450. It's a beautiful pullback for 5. And if they wanted to continue exceptionally building or an introduction of massive volume, it's going to come above that 469 or closer to that 5. So you had that possibility. But the longer it went on, the longer the volume came off, the longer that you didn't see any kind of prints that said short term, and the more that you saw big buying, you knew the strategy was still the same. But now it's not exceptional build, it's going to transition into regular build. Hence the volume dropping off. Hence, at some point there's going to be a little bar coming down so they can continue on with that strategy. Thank you, Kevin. Appreciate that.
No problem. Thank you, Doug.
Absolutely. Okay, so at this stage, we're going to talk about just a couple of basic things. And what do we use? We can even stick with UAVS. I am going to speak about some basics on our form of tape reading and day trading. It's going to be so basic, but it will give you an understanding, as I spoke on last week, about what are some of the basic things that we look for and we need in order to create a high percentage trade. The two main factors that you need: one, you can't trade a stock if you're a follower unless you have a market maker to follow. So we need to see the entrance of controlling prints. We need to see a market maker showing that he or she are going to come into a stock, control it for a small while, and give us the possibility to take a trade by following them. So we need to see controlling prints. What are controlling prints? Controlling prints are a larger set of prints that retail overall could not buy. So if this stock right here, Milan, actually take this off and let's go on IONQ because it's more of an expensive stock.
Doug, I'm gonna have to give you sharing access.
Okay, no problem. Okay, so if we're looking at IONQ, let's say, for instance, we know 27. How do we know that this was building? The size of the prints that were coming at 27, 2750, 2650, even 26. When you're seeing 4, 5, 6, 7, 8 prints, and when I say prints, remember one thing. So for instance, if we were looking, let's see if we got anything significant we could look at. All right, I don't see anything significant, but let's say, okay, let's just say this, for instance. Look, SMCI, 2640. We could see that 2640, and if even better, let's look at 2641. We can see it's 3 prints. So when we say 3 to 4 print personality, we mean the burst that it printed together in. And if you look at these 2641s, they printed together. But what it doesn't say is how many shares. When you say 3 to 4 print personality, it doesn't say how many shares were purchased. Well, look at this right here, 2841. At the top, that's 14,400. That's 5,700. That's 3,800. Let's round it off and say 20,000 shares were purchased at 28.41. Well, if 1,000 shares cost you $28,410, 10,000 shares is $280,000, and you're paying nearly $600,000 to own just that. Just to own this 28.41, this 20K position of shares, that's going to cost you nearly $600,000. Now type in the room and say, do you think, give me a yes or a no, that your average retail account has the ability or has $600,000 laying around to simply buy SMCI at 28.41 and this 20,000 amount of shares? Do you think that the average retail account has that type of money? Give me a yes or give me a no in the chat, please. So when we're talking about controlling prints, when we're talking about significant buying, we're talking about something that hedge funds, financial institutions, banks only have the capability of doing. So when you have the capability of buying far more than anyone else, that means you have the capability of then taking the stock to where you want it to go, even if that means in the short term. So if we're looking at, let's go back just to IONQ. If IONQ, like I told you, for weeks, and it was around about 12 to 14 different times, had buying at 27, and let's say the average was 10 print personality, let's say they were buying 100,000 shares on average. Overall, the 10, 12 times they bought, let's say, 1 million shares. How much is 1 million shares cost of IONQ? Type it in. If I wanted to buy 1 million shares of IONQ at $27 price, how much am I paying for 1 million shares of IONQ if I told my broker I want to buy that at 27? Do you think, and 27 million, you are all spot on. Thank you very much. Now, my next question. Do you think someone who has the ability to just plant 27 million at one price point and then build all around it at 27.50, 26.50, 26, would you bet against that person not meeting their target? So out of 100 times, would you bet against that person? Out of 100 times, if that person was wrong 10 times, would you not trust that person, or would you still follow that person every single time you saw it? So I ask again, let's say you saw this situation of big build happen 10 times, sorry, 100 times. And 20 times out of that, it didn't quite work out. Why didn't it work out? Just like HIMS, Amazon enters, you can't plan that. Or a tragedy occurs, or a huge hurricane happens, or presidency changes, or there's war, or there's recession, or there's a housing crash. That's information that is not always foreseeable at the time of the research being completed by a lot of these big financial institutions. But the reality is, does that happen every time? Of course not, it doesn't happen every time. But 80% of the time, if those prints worked out, you're going to follow them 100 times out of 100, knowing 80 times they will work out. And let me ask you something else. One big win, can it take care of most of those losses? So even on an 80% win, does that mean that you always lose 20 cents on a dollar? If you did your average and if you were trading correctly, you would lose 20 cents only in the trade. But if 80% of the time your net cents was $1, and 20% of the time that the trade didn't go in your favor at that moment, you would lose an average of 20 cents. How many losses can one good trade take care of? So if your average wins, there you go, Trevor, 5. So technically, 4 wins will take care of that 20% loss. Are those numbers that you guys would like to trade within? So if those are numbers you like to trade within, what's the key to being able to keep taking those trades? I would assume trusting your read, following the market maker to the right targets, being disciplined, enough screen time to understand how those prints work, and absolutely, John, controlling your risk at all times and knowing how much your loss should be. That keeps you disciplined, that keeps you consistent, that keeps you following, and that keeps your trading far more simple. So, controlling prints are prints that the average retail account does not have the funding to invest in. So when we see controlling prints, we know that it's the presence of a market maker. The presence of a market maker, meaning a market maker, is basically, just to say it one more time, that is someone who's sitting in a trade desk at a major bank, at a hedge fund, at a huge financial institution, who has a huge account and has been tasked with making significant returns on positions. That's the person we need to see first. Then we need to have the right volume. The volume, as I always say, is the petrol that moves the car, or the fuel that moves the car. If I have a beautiful car, but it's nowhere near a petrol pump and it has no petrol, is it going anywhere? So it doesn't matter how beautiful the prints are. It doesn't matter how nice some off level may be. If it doesn't have the correct volume, it will not move. And who is volume? Who is basically volume in a trade? Even Tesla needs volume. Nothing can move without volume. It's simple as that. Air has never moved anything on the chart as far as I know. So every single thing needs volume. Volume is how stocks trade. That's what volume is. That's trading back and forth, buying and selling of shares. That's the participation. But in our sense of volume, who are we looking for as participants? If we are intraday trading, we are looking for retail. We're looking for the ones who jump in on FOMO. We're looking for the ones who get in and trigger and help move that position from build towards their targets. So 2 simple things. You've got to have controlling prints and you've got to have volume. Third, you want to have range. Let me ask you all another question and type in or come on and speak, whoever's getting a bit more confident. If this stock IONQ was trading between 26.50 and 26.70, would that be a good trade or a good trade to look for an entry in?
No,
Is that you, Milan?
that's me.
So why don't you think that'd be good for us? Why is that not a high percentage setup?
Well, if you're looking for 20 cents, like a 20-cent trade, and this is clearly trading in 50-cent increments, your risk to reward is completely upside down. You're risking
Yeah.
a lot just for 20 cents.
Let me ask you another question. How quickly does it get away from your entry? If it's 20 cents increments and this is in a tight consolidation and trading tightly, this small 20 cents, the range is completely lackluster. How good is your entry going to be? Or is it ever going to be any good?
If it's not moving, you're just stuck.
Yeah, you're stuck. What's the key to an entry? What do we need the stock to do as quick as possible?
We want it to get away from our entry point as quickly as possible.
Absolutely. I mean, you want to have comfort in your trade, and more importantly, what does it say to you if it gets away from your entry quickly? That your entry is what?
Well, your timing was right.
Exactly. It validates your entry. It validates that you're trading it in the correct time frame, the correct phase. Now, if it's trading 20 cents and you get in and you see everything you need, and you got in, let's say it was 26.50 million, and let's say you got in at 26.65 and it's trading in 20 cents. Is that smart?
Oh, it's definitely not.
I mean, before you sneeze, you're back into a loss, aren't you?
Exactly.
So we got to have range. And one of the things I told you all in morning meeting is I love a cheap stock that has 50-cent increments. It gives us the ability of range. It gives us the ability that the few prints can move it past your entry so much quicker. What else does a stock with 50-cent increments, high range, great control, textbook, what does that also give us the ability to do? Gives us the ability as we improve as traders to maximize our trade. Because in the end, when we follow build, we set a price target. When it reaches the price target, and if it still has the same consistent or higher levels of volume, establishes our new position higher up, it could pull right back from that position to continue building, give us another entry or another area to add or another area to then expand upon or maximize our position. So 3 main things. Got to have controlling prints so that you know who you're following. You got to have the right volume. That's the petrol for the car that moves the stocks and keeps it trading. And you want to have range. You want to make sure that it's a stock that once you're in, it gets away from you. Not that once you're in, you never get out. Or when you do get out, it's for nothing. It's got to have a risk to reward. It's got to be worth your time. Now, you want a clean trading stock. When there's too many overlapping bars, that also makes it a lot harder, because if you're buying in between of overlapping bars, you can't really understand at times how that pullback could or might work. If it's building quickly in high volume, you've got no problem. But if that volume dips off, that next bar could come all the way down. So make sure that you're looking for a very well controlled stock. Now, if we were looking at IONQ as a longer term play, this is a bit more high level, but this is for you guys who are looking at us or looking at the school for more of the long term, short term options, those type of forms of plays of prints. If I was looking at IONQ right now, and as you guys can see, this is the daily, and let me just go out a little bit. Someone come on who has a bit more understanding and tell me, how does volume play into our longer term understandings? I'll give you a few seconds. If not, I can speak on it, but we only got a few minutes left, so let me talk on it. Volume, in the same way, this is a daily chart. We can see how this volume moved the exceptional buy. When this volume started waning off, we went into a regular build phase. So phase 2 here is just regular build, building slowly on low volume. When we look at the daily, we can see these first 2 bars, and this is when it hit 27 many times. The same way, when the volume came off, we saw it pull back and build regular. When volume comes back in, we're starting to see more exceptional buy. If volume comes here and starts waning off, so if this volume starts going off, this stock will start going off, whether it's building or selling, only we would know. So when you start seeing that, it correlates in the same way as it would daily, it does on the longer intraday or longer term. When you see all this volume consistently high, day in and day out, you can only ascertain that the interest levels are not only higher, but they're seeing that the valuation has to be at a higher price point. So when you read and you see all these retailers who don't know anything because they read charts are saying, oh, this is going to come back to 20, it's going to break 20 and come back to 16. They don't know that all these hundreds of millions of shares that have been traded, millions of shares purchased up top, are not doing that because they think this is only worth $28 for a few weeks or months and it will go back to being worth $8. They're saying that because the potential, the future looks a lot brighter for this company, for this industry. There's so much more being said when you understand prints and volume about the overall understanding and valuation of where stocks would be also. So always keep that in mind. That's something that we will be expanding upon. I'm creating some templates for how buying works for short term, for maybe a month out, and then for longer term. So you guys can really see how different forms of acquiring, whether it's the same day, couple of days, or for weeks, plays into a different transitional phase of how it will reach those targets or what they're doing. Are they just simply acquiring and you have no real understanding of when it will materialize? Or are they buying on their way up in such a way that they're not only buying, but they're exceptionally buying and they're reaching new valuations for the stock overall? That's a different trajectory also. So we will be going over these. These are all being created and everything will be introduced fairly soon. But I hope you guys had a nice little session here at 11 o'clock. I'm more than happy to answer some more questions. If anybody has questions, please feel free to ask. We can go over time a little bit more. I do have 1 or 2 more minutes before I have to get on another call. Is there any other questions? Is everything clear?
I had a question on HIMS, Doug.
I only got 1 minute, so you got to be real quick.
All right, so the amount of 30 ask that we saw, you had mentioned, pull back to 25. I agree with that. I was looking for a pullback to 27.50 to 25. Given the unexpected news and how much it did pull back, do you think the amount of pullback that it had extends the build overall?
Do you not think that information plays a role now in what we saw?
Absolutely, yeah. It puts, almost a limit, or got to take it with a grain of salt now.
What does it do? It takes the interest away.
Yeah, it's a dampener.
Retail moves positions. At the end of the day, yes, the buying's at 30, but if they don't get the correlating retail, the correlating interest from investors, and that's a requirement of lots and lots and lots of small positions, they're not going to be able to maintain it. It cannot stay at the same valuation because the market has deemed that you're not as valuable when Amazon enters. So that's how that works. And that works because at the end of the day, no market maker positions, nothing is 100%. But like I told you, is if you're taking these positions and you're getting them and they're coming true even 70% of the time, you are absolutely winning. You are absolutely overall on top. Okay, so let's finish this session off. It's been a good session. Please feel free if you have any comments or any other questions, send them into Millen. We do have our Traders Exchange tomorrow at 12. With that being said, you all have a lovely afternoon and I'll talk to you in the room.